guess I spent a lot of time looking at UGAZ, as anybody would if they're strapped in it for this roller coaster ride. I cloned the candlestick pattern from back here because I've been watching this half circle pattern kind of play out. It was during March, April, May, June, broke out in June. It's June 2nd now. And we see a very similar pattern going on, but it's different at the same time just because of this big guy right here. I'm inclined to think that it's this, but I guess I'm not so sure. It doesn't coincide with the left side as well as I'd like it to, but let's go ahead and look on a closer time frame of the price action for the last couple weeks. We've got a fairly complicated wedge going on here, but as you can see on my cloned chart that it came into a wedge here before breaking out as well. I don't know, it's just too close for me to ignore that situation right there. So I thought that this was a descending triangle. It definitely wasn't. After I redrew my chart, I realized, that I was expecting this to be A, B, C, D, E, and then we would break out. Instead, this was the move lower, and therefore this is the bottom, and this is A, B, C, D, E, bearish. E is on top, kind of like with UWT that we just went over. And then we kind of just plummet on down, and I had a really hard time drawing these red lines here for our descending wedge because I couldn't find a good zone just because we dropped so fast and hard. But I ended up going ahead and looking at this descending triangle and making the measured moves from it after studying a little bit, and I saw that this is our support 1, our support 2, and then our capitulation down here. So this big leg right here, the pole 1 comes down at our apex, and we see how far it goes. It goes down here to 1375 or something. And this E wave, our breakdown wave, we measure it from the top down to the first support, and then we draw it from the breakdown from support, and we come up with a similar 1360 range, so 1375 to 1360. I can deal with that. What I can't deal with is the $19 to $14 drop, but that's trading, folks. However, what's interesting is we are coming into this apex right here. We do see some solid consolidation down here. What I expect to happen to some degree, let's see, where do I have it, is this wedge pattern to take place. I think we've got a 1, 2, 3, 4, 5, 6, 7, 8, 9 would be at the very bottom, and would also coincide with both of our poles lining up to bring us this 1375 price target. And it would also be near the apex of this descending triangle. So with this descending triangle here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. So support zones, these are Fibonacci lines. This 1450, which we broke under, was the 23.6, and this final green line is the be-all, end-all support at 1380. And this coincides with the 0% line over here to the previous bottoms last year at the exact same time as right now. Fortunately, one thing to look at is if you listen to my RUSL video, I talked about how the impulse wave and the corrective waves are usually equidistant from each other, and this wave right here, I've measured it out to right here, and here to here is exactly the same distance. So our corrective wave in regards to time should be nearing its end soon, although I've been saying that for the last several days, and it's amazing just how quickly they can drop it in several days. But when you're looking at a chart of 5 months, a couple of days goes by pretty quickly. Our time fib, we've got a low, low, high, and right here, I'm really hoping is going to be our low. This time fib also closely aligns with the apex of this descending triangle, and these measured moves and the pattern, which I've identified as the descending wedge, as well as support, leads me to believe that we've got to be bottoming in the next couple of days here, if not shooting up higher. This green line here is the apex of this descending wedge that I've drawn here, but I've been rickrolled by this ETF the last week, and I started looking at nat gas. So let's take a look at nat gas futures to get a look at the actual prices, and it's a little bit more scary just because my green lines are much farther apart, which means that if we break through this level right here, we're probably going down to 2.6. However, I did notice, and I deleted it to draw the lines. It has a history of making pipe bottoms, which if you've ever heard of them, they are basically a place where it has to be on the daily or weekly scale, where price kind of makes a two-wick bottom move, and we've made that here with 1 and 2. We've also got a ton of divergences. I've been getting messed up on the divergences all week, but divergences are a lagging indication of a reversal, but they are an indication of a reversal nonetheless. I've had so many people tell me that this head and shoulders has broken through, and it comes down to all where you draw your lines, and if these people think it's broken through, then their lines have been drawn wrong. So, for example, I mean, this is your left shoulder here. This is not your left shoulder here. This is your left shoulder. We come down. This is our head, and this is our swing low, and this is our right shoulder, and that's your head and shoulders. So we most definitely have not broken out of this head and shoulders. Everybody keeps trying to spook everybody. We've got a long ways to go before we hit that head and shoulders. That is, if we get denied from this green line right here, which I have as hard support. These two green lines are hard support, but even at the very least, we've got to be seeing a dead cat bounce anytime soon here. This black line is the apex that I've drawn out here, and again, I have the same bullish wedge pattern that I identified in UGAZ. We go 1, 2, 3, 4, 5, 6, 7, 8, 9. And it doesn't look like it on the UGAZ chart, but here on the Nat Gas chart, I think it's much clearer that we have a little bit further to fall. I have a feeling that we're probably, we might hit this green line, but in the grand scheme of things, that's only 1 penny down. And over the last 2 weeks, we've made a 4 penny move. So if you can hold on to that last, 4 or 5%, if you're in UGAZ, if you're in UNG, I would recommend doing so. We are more than exhausted here. You can see the RSI is flashing green multiple times in a row, bearish volume increasing. These are all sells of stop losses, so people are covering. Let's go to the 15 minute, because I think I have a bunch of divergences in here. Actually, let's look at the divergences on UGAZ. Also, positive thing is we have 2 gap fills to look forward to. So if we can get back up here, we'll gap fill basically immediately here. And there was basically no consolidation in between these gap fills, and therefore, if we get up here, we might as well just go all the way back up here. So I do believe there's a lot of potential to be made here in natural gas. If you haven't gotten into it yet, I guess I'm bullish. If you've got a weak stomach, I probably wouldn't recommend it, but there's a couple interesting things going on here in the chart. First and foremost, here on the 15 minute is probably the most evident. We've got this descending triangle going down right here, and this green candle at the end of the day was the first candle that has closed completely above it. It's also at the apex of this ascending triangle, so I think that we're probably going to see a dead cat bounce on Monday. Again, I still think that we have slightly lower to go. If you're bag holding, sell half, sell a fourth of whatever you've got, and buy back lower might be a decent plan. Right now, we're just waterfalling, and waterfalls typically last for longer than you do, and then the smart money comes in right when it's at its bottom. In terms of divergence, there's a huge divergence here on the 15 minute, and then this goes back to May 31st, which is basically at the start of our breakdown. And we've got price moving from 1650 to 1480, while our stochastic has steadily moved up. This is a clear bull buy setup in regards to stochastics. In CCI, we have it coming down all the way to 480 something. And in the previous ETFs I analyzed, I actually said that this increase in volume, this extreme CCI reading, is actually good for the bears in this situation. However, it was starkly different, just because the follow-up to all those was always higher, or significant bear volume like we see here on the left side of this, but on the right side here we have almost no bear volume coming in, and we went green here for the first time since we broke down over here. So I think that this, the CCI I use mainly to identify the momentum, but it's also a good indication of when the sellers stop shorting and they take their profits. This coincides with a low RSI reading right here. This is on the 5-minute. So there's just been divergences all over the place here for UGAZ. Here we've got our lowest RSI, and for the extent of this move, we've been moving higher, and we finally broken out above this. Under 30 is considered very bearish, and we've broken out and we've started to touch this 50 line. We broke out of it for half a second, we fell back in, and then at the end of the day, we broke back out of it. What else is there to note? Oh yeah, this descending triangle again. One more time, let's talk about the volume signatures of it. So it's basically descending volume into a new high. Sellers step in, short it, and then it gets to the bottom, descending volume until they start shorting it again. We can see significantly less people shorting this at this point in time than we did right here, and then we see this rounded bottom pattern, which is typically a pretty bullish indication. Final verdict, short-term bullish UGAZ, medium-term neutral, long-term bullish. This was my ETF analysis for the coming week. I hope you enjoyed it. I spent a lot of time on it. Please comment, like, subscribe. Love talking to you guys. Best of luck trading to you guys next week. All right, bye-bye.